कुछ होने में और बहुत कुछ होने में इतना सा फर्क है, एक बार सोच के छोड़ देने में और लग के कर दिखाने में। मान लेने में कि जिंदगी ऐसे ही कटेगी और सुबह 4 बजे उठ के सोचने में ये अभी तो बस शुरुआत है। किसी मैगजीन को हाथ में लेने में और उसी मैगजीन के कवर पेज पे होने में इतना सा ही तो फर्क है। वीआईपी सीट में और उसकी पिछली सीट में इतना सा ही तो फर्क है। वो जिसका मैदान ही खुला आसमान है, वही कल जमीन पर तो था। पूछोगे तो बताएगा वो पंछी, ये एक दायरे में सिमटने में और पूरी दुनिया को दायरा बनाने में बस इतना सा फर्क है। इतना कितना है? इतना है या इतना है? जो नापेगा वो जाने कि जहां धरती और आसमान मिलते हैं, नानकुर से दूर, अगर मगर शायद से दूर, वहां भी दोनों में फर्क बस इतना सा है। धरती और 7वें आसमान में फर्क बस इतना सा है। ये एक अंतर प्रेरणा है। ये हमारी, आपकी, हम सब की अंतर प्रेरणा है। एक कदम, एक छलांग, एक बाजी, एक गहरी सांस और एक ललकार खुली हवाओं में कि हाँ मैं बना हूं उन फिजाओं के लिए, कि हाँ मैं बना हूं उन ऊंचाइयों के लिए जो ऊंची तो बहुत है पर नामुमकिन भी नहीं, क्योंकि मुमकिन और नामुमकिन में बस इतना सा फर्क है। धूप छांव में फर्क बस इतना सा है। तो बस चलिए फ्रेंचाइज इंडिया के साथ ये फर्क मिटा देते हैं। फ्रेंचाइज इंडिया, 20 years of ideas.
Good morning, friends, and welcome to Franchise India. I'm Gaurav Maurya, Chairman of Franchise India Group. This session is a 30-minute session. We're going to talk about a very important aspect of selling your own business. This is powered by BusinessX. BusinessX is a resale platform of Franchise India, where we sell existing businesses to new buyers. So as I said, this is going to be a short webinar, so we make it very interactive. So you can use the Q&A box to ask as many questions you have, anything which comes in your mind if you are looking to sell your business. And let's start with a little bit of introduction. I'll start with my introduction first, and then subsequently I'd like you to also introduce yourself on the Q&A box or a chat box. So I started Franchise India in 1999. Franchise India was India's first start your own business platform. There was nothing which was before Franchise India where you can go and take a professional advice in terms of what business you want to start. And that became very successful. We have worked with thousands and thousands of brands when they want to really scale their business through franchising, actually about 8,000 plus brands. And we work with a lot of investors. Actually, millions of investors have come to Franchise India through our platforms, our exhibitions, our forums, our magazines, our digital platforms, and so on and so forth. And we have actually served them in helping them starting a new business. And it was actually coming from their need, we started BusinessX. So a lot of investors used to come to us and say, I am interested in buying a business, but I also am open to buy an existing business. And then I started thinking that it is actually good sometimes not to really create something new. It is much easier to go and buy an existing business which is already running. And that's why BusinessX was born. BusinessX we started about 8 years back. It is India's first business resale platform, which means any business which wants to sell or exit can come to BusinessX. BusinessX also helps people to raise capital, also connects them with coaches and mentors. So we talk about all three things. We talk about growth and scale for your business. We talk about how you can capitalize your business, which means that you can raise capital through an angel, VC, or a private equity. We also help you to exit the business. And today's session is actually on the exit. So this is a little introduction which I want to do. I'm also joined with me, Varun Mahajan. Varun Mahajan is a senior member with us, works with me in BusinessX. And he's also a sell your business specialist, which means that it helps people to plan their exit. And it's a very, very structured way of planning your exit if you want to exit your business. So friends, I see a lot of people already joined in. Thank you very much for doing that. And can you introduce yourself on a Q&A box? I'll ask two questions. If you are somebody who's looking to sell your business, which means that you've decided or you're seeing an option. Sometimes you've decided very firm that you want to sell a business. Sometimes you're looking at option. If I get a good price, I get a good buyer, and if I get what I wanted, I might look to do it. So if that is the case, then you go use the Q&A box and write exit. Use the word exit. So it means I clearly know that you are here for exiting the business. And if you are here to get capital or means raising capital, then you can also write capital. And if you are somebody who's an investor who wants to buy a new business, which means that you want to look at a running business or a new business, then you can write an investor. So use the Q&A box and introduce yourself. It's very important that we know where you're coming from. Either write exit, write capital, or invest. All three, I will understand what brings you to this, because you're putting your valuable time and coming there. And then we'll get started on today's agenda. We'll talk about in our agenda why people sell the business, what is the reason why people do that. If you're selling the business, what kind of valuation you can expect. And Surya, Mr. Puri, welcome to the session. So others also I will encourage do that. I know sometimes people are a little hesitant in sharing this information of exiting, and they're sometimes not even in their terms. They have not even accepted that this time has come, they need to exit that. Actually, this is the biggest problem. This is the biggest problem I've seen in business owners, that they emotionally get connected to their business, which is not bad, because you need to have a passion to build something, but you should not be emotionally connected. And I've seen a lot of businesses actually putting good money behind bad money. If something is not working out for you and you know it, you have tried your best, then there is a time you need to decide that you want to exit. And it's a very critical decision. It's a very emotional decision. It also brings you in a lot of social pressures, your personal family pressures. A lot of things actually combine when you are coming in terms that you want to exit the business. A lot of entrepreneurs take it personally that they have failed and they are not able to run that business that they're selling it. Actually, it's not true. It's not true. There are many other factors in any business to be successful. It can be right capital, it can be right timing, it can be your effort and focus, a lot of things. Every successful entrepreneur, even the most successful entrepreneurs, had a failed business, right? Look at, Reliance trying to build another Raymond's, and they launched Vimal. It was a good business. It was launched very well. It had probably the most greatest launch, but where is Vimal now? Right? So every business owner who has been a very successful journey would have portions of not so successful parts. And it can be purely from focus. It's not that Reliance today also cannot build Vimal as a brand, or they cannot build another Raymond's, or it can actually make a 2x of Raymond's. But this is not their focus. This is not their focus. It doesn't add to what Reliance Empire is all about. So sometimes people have some businesses which they don't have the right attention or focus, or they want to consolidate, they want to course correct. A lot of things have to be done. And that's why exit planning is all about mindset. It is about mindset, that you decide that this is a time where I will have to exit the business. But let's talk about this in even more detail. Why people exit? People exit because they have a financial pressure. They have a financial pressure, their cash flows are not matching, they're not able to get enough revenues coming in to make their expenses, and they keep mounting up. Yesterday night, I was having a dinner in Bombay with one of the entrepreneurs, and he told me that he struggled. He ran a business for 12 months for that business, and 12 months, every month he went to the same business and lost money. So you see how much drain it does to you, because you're seeing everybody else benefiting from you. You're giving rentals, the landlord is benefiting, you're giving salaries, the people are also benefiting, your customers are also benefiting, everybody is benefiting outside you. And you are the one who was only working the hardest and putting the maximum commitment. And this happens with a lot of entrepreneurs. A lot of entrepreneurs work hardest and they get the least. So which means your financial structure is not right. You're not financially making money. So if you are in that stage and you've tried your best and you feel that there is nothing more you can really bring on the table now, both by capital and effort and energy and passion and so on and so forth, the time has come that you decide that you exit the business. Second is for profit. You're doing extremely well and you're making a lot of loads of money, but End of the day, you wanted to make this money for doing something even greater, which means that you have bigger dreams in life, which you want to really do that. So you might like to exit the business for profit. You want to make profit, you want to cash out. So that's also another reason. Third is, which is very common, but we don't accept that. It's business fatigue. It's a very unique thing. We don't accept that. A lot of people continue to do the same business for years and years. They have no more excitement left. No more excitement left. Rather, I say every third year, when you start the business, when you incubate, you're most excited. You're actually doing everything. You, as an entrepreneur, you want to do everything in the business. And then your excitement starts going down. And then you just become a custodian of something which is working for you, and you continue to do it. But you're no more excited. But now, these days, a lot of entrepreneurs come to terms with this because they want to do something else in life. And they want to do something else, and they make a decision. Even Bill Gates running Microsoft, if given an Indian culture, he would have never left out being a chairman of Microsoft. He will continue to be Microsoft CEO and chairman, and he left it. He wanted to pursue something else in life. And so sometimes at a certain level, you're fatigued by whatever you're doing. It might be the biggest in the world. So if that has happened, you feel genuinely that you're no more excited about this and you have something else to do in life. And actually, this life is too short. People want to accomplish a lot of things in their life. And if that has also happened, then maybe an exit. Succession has become a big issue. Your children don't want to run your business. You don't have anybody in your family to look after that business. Then also you need to look at an exit. Another area which is becoming more and more riskier for entrepreneurs is liquidation. Sometimes entrepreneurs take a lot of debt, and I have seen in last about especially 10 years, the world has changed significantly. The way businesses are run are significantly. If you see the smartest organization, the guest of the entrepreneur, the great family businesses all collapsed in last 10 years. Why they collapsed? Because they were all riding a lot of debt, right? And we just talk about these big companies, the SR, the Videocons, and the Bhushan Steels and likes of them, but we don't really talk about these smaller entrepreneurs. Smaller entrepreneurs, because they don't hit the ET or they don't hit the Mint or any other business channel. But real sense is that every day so many businesses are being liquidated. Why they're liquidated? Because they're having a debt. And entrepreneurs runs very hard to just service that debt, but after some time it gives away. And the entire asset goes away. So I always say, if you have debt sitting with you and you are just servicing the debt, you are on a ticking bomb. You're a ticking bomb, because debt in India is so dangerous, because it's a very high cost of capital. I don't know why government of India doesn't see, if they really want to encourage entrepreneurship in this country, the cost of capital has to be lower. Otherwise, it doesn't make any financial sense. Sudesh, welcome. Sudesh, good to know that you're raising capital. And we work with a lot of institutional funds. We work with private offices. We work on independent investors who put in. Rather, Franchise India runs the largest investor base when it comes to what I call micro to mid size investment. Anything which is a few lakhs to 100 crores. This is a space Franchise India has the largest ecosystem of investor base. There are many other reasons also why people want to really sell the business. It can be partner split. You're not working out with your partner and you want to sell the business. So all these can be reasons. You need to now ask yourself, any of these reasons which is troubling you or you want to really use on, which means that you have some kind of a financial pressure, you have some kind of a liquidation pressure, you have a partner split, fatigue, or in the other side, on a good sense, you want to really cash out. You want to sell something which you built and you want to become and do something else. So there are three options which you have. One, complete sellout, which means that you completely sell the business, 100% company's business is transferred. Either it can be company transfer, which means that you sell 100% shares of the company to a new buyer, or you can just take the business out of it and sell that business 100% to them. There can be also, which can be what I call partial buyouts, which means that you want to limit your liability. So you might be sitting on a debt and you want to convert the debt into an equity and bring in an investor. And third is an operational control, which means that you want to have substantial share holding of somebody else who takes an operational control, which means that you have two agendas. One, you want to cash out something, but second most important agenda is that you feel you're operationally not able to do justice on that. I can tell you that every single business owner eventually has to exit. Earlier, we used to exit to give it to our next generation and next generation would do that. Now it's changing. It's changing that you have to really find out. But eventually, everybody has to exit. Nobody would have the same energy level to run the same business over and over again. So now, once you've decided that this might be an option for Ant, I think you need to set your goals. You need to set goals, and these are two what I call foundational goals. Only two reasons which makes you take the decision are: one, your financial freedom. You want to set yourself free. I know how much locked entrepreneurs are. It looks very interesting that they're running these businesses, they're doing well, they're traveling all the time, but they are locked. Their life is actually captured. They want to set free. They want to really do something else in life, but they're not able to do that because they always have this pressure. My father has been running a business for a very long period, and I know that most of the holidays he were with us or any other, I think he was always thinking about what is happening behind and things of that nature. So business owners are so captured in their own business. They are not the people who can close their phones and just lie there and not attend anything. This is not an option for them. They also have to be always available. Even in more crisis, when the things become even difficult, they have to be even more. So I always say that entrepreneurs do actually the most expensive job in the world, where they cannot get any leave and they are actually paying others and getting that job. So if that is a situation with you, then you need to really get that financial freedom. Second is limit your liabilities. I continue to say this, and I continue to tell entrepreneurs, anybody I meet, and said, don't sit on liabilities. Change your liability. Give equity. Equity is not bad because you're bringing somebody who believes in you and takes an equity in your business, but don't sit on a liability. Second is operational goal. You want to also see operational continuity, and you want somebody to be operationally looking after. And there also can be value-based goals, which means that when you exit the business, maybe you have a second generation business and you want to exit the business, but only to somebody who can have the same value system, who can look after your employees, who can look after your vendors, who can look after your brand, which you've seen so well. So these are three goals which are very, very important. One is foundational goal, second is operational goal, and third is value-based goal. Once you have decided that this is the time I want to really look at an exit, you need to clearly define what is your expectation, who can be the right buyer, how do I represent that buyer, what do I take to the buyer, and why it can be compelling for somebody to look at the reasons. Always look at from the eyes of the investor, because investor has a perspective on your business, and I'll talk about that in more detail. But before you go there, how do you set value? Because this is a very important part. And this is one of the areas which surprises me, that business owners know what have they invested. So which means they have very clear idea about what is the price of everything they did. So what is the price of everything they did, which means that they put this much in putting up the factory, this much in the machinery, this much in marketing, this was a cost. So they have price for everything, but all this, what you have done, what value it built, they don't have an idea. They don't have an idea. Imagine you running a business where you don't know what value you built, what worth it has. You don't have an idea. You have idea about how much your house is costing you, valued, your car is valued, your watch is valued, everything you possess, you know the value of that. But the business which you're running for 12 hours every single day, you don't have a value. And this is true with almost all privately held businesses. Only public companies have market price or a market valuation and so on and so forth, because it has a share value which has already been determined. But private businesses don't know value. And this is one of the areas which BusinessX and Biz Equity, which is a separate company of ours, really work the first step. First step is we work with you to set your value right. What is your business value? And if you're not even looking to sell your business, you want to raise capital, or you want to even bring in a partner in that, I think it's very important that you understand the value of the business. That is something which is the first step. And I have a particular principle, because when you work with larger businesses, the valuation principles are very different. Very, very different. You have to either do a future forecast, or you would do income-based valuation or asset-based valuation, depending on where you are coming from. But when you're working with smaller businesses or maybe franchise businesses, there is a very different way of valuation, right? Either it can be replacement cost. Why would somebody buy your business versus creating the same thing themselves? What is the replacement cost? And I've done a lot of series on valuation. They're all available on gauravmaria.com. You can go and see all those valuation and I think and understand how value has to be perceived. The fundamental rule is that you need to see that it has to be looked from the eyes of the investor, and it is a mix of what I call art and science. Sometimes these all valuation experts really take a certain goal of achieving that valuation and put everything around it. I joke with them. A lot of young people work in my company also. So they set the goal. Because I'm chasing a goal of 100 crore valuation for business, I will put all the numbers which stack up to that, which means that if I have to do this kind of thing, or they would do comparatives, right? This industry, because I'm in e-vehicle, the next e-vehicle company was valued at that. So I can also do them comparative on that. All this is a mix of what I call art and science. Science is all about what your numbers, your past data or future predictability is telling you. And art is why you are so important that somebody has to look at buying you. What is the strategic component in that business? So I call the SAS principle. This is a principle I have created myself. I call the SAS principle, SAS principle. S stands for the strategic value. What is the strategic value in the business? Why people would need to look at buying you out? It can be location, it can be your market share, it can be go-to-market capabilities, it can be talent, it can be anything which is extremely, extremely strategic. Like we used to buy a lot of businesses before COVID in Bangalore, only these bars. These bars we used to buy and sell. And most of the time, the investors who was buying this would actually finish all the interiors, do an absolute new finishing, because the licenses, new licenses of bar licenses were not available in Karnataka. So you had to actually buy them out. Like I'm doing a big thing for a pharma company which wants to open up, say, 40 pharmacies in Punjab. Punjab also, new pharmacist licenses are not available. So we are doing strategic acquisition of these running mom and pop pharmacies because they can be acquired and these licenses can be used. So it's a very strategic value. That's very, very important. The A stands for assets. Assets can be both tangible, intangible. And S stands for subscriber value, which means that what is your customer base, how deep is that customer base, how predictable that customer base is, and what is the life of that customer. And I can tell you the most valuations are happening on this S. This is the S which is most important, because assets you can replace, and intangible assets sometimes can be very, very strong, which means that you have a proprietary technology, you have a patent, that can be very, very strong. But other assets, I always see that replacement value comes to mind, or the strategic part of it. So essentially, how do you really go out and tell your business and say, I have this strategic, this is my asset component, which is very compelling, and this is my subscriber base. On that, we set a value. Now, this value we also set from the expectation from the industry. It is also expectation from an investor, because end of the day, investor is also looking at it. But investor also look at a lot of other things, how stable your team is. They also want to look at it because it's very, very important, because they take over the business. I always say that an investor, when they take over the business, they have two things running in the mind. One clearly is the future, which I'll talk about later. And second is ease of taking over that business. And I know a lot of times people don't take decision because the ease of taking over that business was very difficult, right? Because it looked like everything was around an entrepreneur. There was no operating structure. There were no processes. There were no systems. So how you can demonstrate great operating structures? How can you demonstrate a good, stable team? How you can do that? You have a realistic data of investor base. How you can talk about very effective financial control. You're compliant, you're financially controlled, and you also have a very stable and improving cash flows. There is improvement which can be demonstrated. So all these things sometimes you are not ready with, and that's where Business X comes with you. We coach you, we work with you to set that right. Once you've set that, then we go in the market. We have right valuation, we have right presentation of our organization, which shows ease of doing business, then we go in the market. And when we go to the market and talk to the potential investors, we only present 5 things. This is also my formula. I stick to this because I feel outside this, a lot of transactions I've done, and all the transactions I've found that anything else has no meaning. When you're talking to a potential buyer, you have to only talk about these 5 things. First one is show future over past. Entrepreneurs are classic examples of people who continue to talk about their past. They talk about past, they talk about how they built it, how much hard work they did, and so on and so forth, how big they've become, and so on and so forth. Has no meaning for a future buyer. Future buyer is looking for the future, what it can do from what he's taking over. So show the future, that's very, very important. Second is that you are redundant in your own business. This is something which I learned hard way. I was doing myself a term sheet on my own one company. And when the term sheet was about to happen, the buyer side asked me and say, it looks like that everything is around you. And I felt like this is a compliment to me. And I actually started boosting. Yes, I am involved in every part of the business. And they declined the deal. Why they declined? Because they felt that everything was around me and I was so involved integral to that business. If you can make yourself redundant in your own business, you build value. When you're raising capital, like Sudesh wants to raise capital, he's very critical. He's the one who's running the ship. So people would invest on him. But when you're selling the business, you should be redundant in your own business, which means that you are no more needed in your business. It's a very different mindset, very, very different mindset. So second thing is replacement of a founder. Third thing is predictability. Businesses should have predictability. It should not surprise you. It should not have these waves or a structure. 1 month you're performing, 1 quarter your sales is different, second quarter is not happening, and things of that nature. And you have argument, no, because we stopped marketing and did this and did that. All this shows that your business has less predictability. A lot of times you take deal to the market, and when somebody would ask and say, why your sales dropped in last quarter? And he says, because we had something going on and we had this happened, our marketing was less. And so it all tells that you have no predictability in the business model. Fourth is unlock value. Unlock value. Every business has some unlock value, which is so inherent to the business. What is that unlock value is very important. And fifth is if we can show some kind of a recurring revenue, because recurring revenue keeps the business float. What is a kind of a structure which you need to do that? So 5 things, very important: future over past, talking about replacement of founder, understanding predictability, unlock value, and predictability. So when is the time when you really decide? Because I'm getting into the last part of my webinar, and friends who have joined in for capital, please reach us also, because I do a separate session for helping you raise capital, what you should do, how you should really design your business model, who can be the right investor. You are looking for a strategic investor, or you're looking for a financial investor. If you're looking for a strategic investor, there is a different reasons for it. And their approach to business is very different, because they want to really value add in what you're doing. They can bring in better distribution. They can bring in any other aspect to that. And when you're looking pure play financial, it's a skinny financial reward, which means that you're already on a certain scale story, and you can give a better dividend on their equity, which they bite. And most of the time, they're not coming in equity for the dividend. They are coming for equity growth, which means that I subscribe at a certain value and I go to the certain value, and you can show that growth path. And most importantly, in a capital, you can show also how they're going to find exit. Because sometimes there is a good story, but it's not backed by when I cash out, when I get my return. So that's also very important. So let's get on to now a very important aspect: at what stage you think that exit has come, right? You want to exit the business. One, you have peaked out. You peaked out, you're not able to go further on that, and you are stuck at that level. That is a time where you need to decide that, look, I need to do something, because I have no idea left for me to justify my business. That's very important. And Ajay ji, thank you. We have many options available, good options available in Calcutta, which you want to acquire. There are also a lot of build operate transfer we are doing, where we are getting companies which are running, large companies, even Tata Chroma is with us, and other companies are there, where we are giving their running businesses to investors, and a lot of other opportunities also available, which we are doing in certain markets. So we can talk and connect after this webinar, and I'll be more than happy to help you depending on your investment appetite. So when you peaked out, you need to really think through. Second is when you think that you need to change the orbit, you need to go to the next orbit, but you don't have that capital available with you. So that also isn't a thing. You need to be also sometimes thinking like an opportunist, because you feel that there is a consolidation happening in your industry and you want to really go out and capture that. Say you are in a business like these days, e-vehicle. There are about now 300 OEMs which are come in the market. Do you think these 300 would survive over the next 4 or 5 years? Answer is no. So some of them would take some market share in some regions, and I would say a huge M&A opportunity opening up in the e-vehicle space. A lot of consolidation, a lot of buyouts would happen. Somebody would have a market share, somebody would have great product, somebody would have great innovation, somebody would have something else, better team, better structure, better manufacturing capability. So depending on where you are, there will be a lot of consolidation. And I think Nikhil wants to exit and invest. Good, Nikhil, we can touch base. Happy to talk to all of you, because this is something which I lead directly, and this is what I love doing it, because I feel that this gives me my best creativity to work with entrepreneurs, to understand where they're coming from and how I can help them on one side find this, so to say, financial freedom, and also work with them creatively to reduce their liabilities. This is something which is a very strong passion with me, because I have been an entrepreneur for now 28 years, and I've passed all these stages, right? I've faced challenges on businesses. I've done my own exits. One time I invested into 52 companies just in 2015-16, and I exited about 30 of them. And some exits were very painful, very, very painful, and very difficult to do it. And in 1 year itself, I did about 14 different exits. And I did exits in different sectors. I exited to third party, I exited within business, I exited to even my employees. One business I exited, one of my employees actually took over the business side. So I've done all creativity in this structure. So I can bring in some kind of options. Another area which you should always be very, very careful, and this is something which you should never do. Like there's a Calcutta-based, just went. I think there is a company which founded. I met the founders about 4 years back called Sas Sundar. They were discount pharmacy and dieting, and they recently sold to Flipkart. They did the right thing at the right time. If they would thought that they can become another Amazon or a Flipkart, because Flipkart and Amazon would eventually come in the delivery of pharma. They're not going to leave it. They're not going to leave a $50 billion industry. They're not fools. They want to build the capability. So if you think that you want to be a Flipkart or Amazon or entire thing, you're doing a mistake, because already Reliance has come, Tata's have come in the same business. So they were smart and they were quick enough to go out and sell this business to Flipkart. And I know there are only 4 buyers in the market today. There is Amazon, there is a Flipkart, there is a Reliance, and then all 4 have acquisition done. And there would be another 2 or 3 which would build up, like a PharmEasy and other players who would reach and that. So if you are in a business of the same business where the elephant has become very big and competing with you, you need to collaborate with the elephant. You cannot fight the elephant. So smart people know the timing right. And I know a lot of other people who had the same business, but they failed because one MG is gone, NetMeds is gone, Sas Sundar has gone. Sas Sundar was actually the smallest stock of the world. So if you really are smart enough, you understand when is the time to really want to do that. Sometimes people miss the boat. And even if you have a great product and you lack distribution, then also you need to go out creatively and sell that business to somebody else. But be very clear about the outcome. What do you expect? What is your expectation? I always give any buyer, seller comes to me, I say, you have 3 choices working with me. One choice, number 1, I get you what you expect, which means higher valuation, which is what I call a nice to have valuation, right? Second, I give you the must have valuation, which means that you take a haircut, but minimum you get out. And third is, we don't agree on the first 2 and we don't get it. The third is obviously we have to go for liquidation, right? So, but if your timing is right, you will get either of the first 2. So which means it either must have or nice to have. We will go out and push the best effort to get this, but don't come to us at Business X or to me as an advisor if you don't have clarity of what you want. What is the bandwidth which you need to do that? Because I don't want to just go and create dreams for people to have unrealistic expectations. That doesn't work. So at Business X, what we do, we understand and put a deep time with you, maybe meeting or a confidentiality discussion with you to understand where you're coming from. We go deep down in understanding your business, understanding why you want to do that exit, or you want to raise capital, either of that. And once we have understood and we feel that we can do justice, then we work on business plan. We work with you on a business plan. We understand what should be your right business plan. We also set your valuation. We do a valuation document we call information memorandum. We create that. Then we also really define the buyer group, which is the buyers which can fit in. It can be strategic or a financial investor, depending on where you are. And then we also work on the whole structure of the deal. What would be the ideal deal, in the business. So sometimes we feel that eventually you want to exit, but today we might not get value. We need bridge funding to float that business or get to a logical level or to make it performance ready. or growth ready or a scale ready, right? So depending on where we can reinvent it. And once the deal is done, which means that we bring in a term sheet, then work on their legal and the commercial contracts and so on and so forth. So the entire 9 yards is handled by Business X. Business X is a specialist in working with businesses which are worth from 30 lakh rupees to 100 crore. We don't do anything above that. Not that we cannot do it, but we specialized on what I call micro and mid businesses. So friends, if you are somebody who's interested either to exit or raise capital, you can reach out to us. Both me and Varun are available. Varun would rather call you up and understand what your interest was, because everybody who joins us, we really reach out, and he's a senior member. So we don't really tell juniors to call because it's a confidential discussion. It needs either me or Varun to be discussing with you. I'll put my own direct number. If you all can see the chat box, it's 98102 44330. This is my direct WhatsApp number, and also my email ID is very simple, gm@gauravmarya.com. You can also visit gauravmarya.com as a website. You can see a lot of videos from me. If you're interested in the subject of investment, capital raise, valuing your business, or exit, this is 4 subjects I work on apart from my franchise and entrepreneurship, which is the other part of my business. So friends, thank you very much for joining in. I know it's Sunday. Sunday is always about family or time with friends and so on and so forth. So if you're joined in, you're extremely serious about what you want to do. And in any case, we can be helpful. We can be part of your journey, either to really find you the financial freedom or help you to grow or scale your business. We're more than happy to be participating. So thank you very much. Thank you for taking your time out. And please send me a small note on a WhatsApp, and then I'll get in touch with you directly. Thank you very much. Thanks for your time today. Enjoy your Sunday.